Hello traders, my name is Logan with Funding Talent. This week we are doing May 17th market forecast. In this video we hope to highlight the best fundamental drivers for you to keep your eye on as always, and the best technical setups for you to capitalize on and implement into your trading strategy. So without any further delay, let's get right into the video. Hello traders, so here we are on our slideshow as always, and before we dive into the recap of last week, I just wanted to quickly send my thoughts and my condolences to anyone that has friends or family in Israel, and that is all I will say on the subject for now. But let's get into the recap of last week. So, for last week, we did give out a couple of trade entries, and EURGBP hit take profit. CADCHF did also hit take profit. EURCHF would have been stopped out if you used an aggressive stop, but if you did not use an aggressive stop and you placed a conservative stop loss to let the trade fluctuate a little bit, then you would still be in the trade, and I'd still be pretty happy with the trade right now. We are consolidating, but I do still think that prices will move higher in the near future. And then for our gold trade, as we know, it is working out very well, but I do have some notes about that coming up for you guys in this video. So for this week's upcoming high-impact red folder news, the only days you really have to be worried about are Wednesday and Friday. Wednesday, that is 9:30 p.m. for the Australian dollar, and then on Friday, that is 3:30 a.m. for the euro. So retail sales in the U.S. unexpectedly stalled in April of 2021. This last month, which is disappointing markets that expected a 1% increase. Not a huge change, 0 to 1% is not enormous, but it did not reach that expected level. The University of Michigan's consumer sentiment for the U.S. fell to 82.8 from 88.3 in April, well below market forecast of 90.4. We expected that consumers would be happier and have higher expectations for the economy, but actually they came out a little bit lower. This is primarily due to those rising inflation numbers that everybody is talking about. Jobless claims fell to a new pandemic-era low of 473,000 last week, and so far 12 states have announced that they'll stop distributing extra unemployment benefits as soon as June or July. So there's definitely not some great news, right, with consumer sentiment and retail sales coming out lower than expected, but as you saw, jobless claims are lower compared to where they have been, so that is good news. My risk sentiment will remain a risk on for the time being, but if we get another week of bad news and some more decline in the stock market, which we started to see this week, then that will be switching to risk off. So this week will be very telling, and I hope everybody is very excited to see where things are going, because either way, there's going to be lots of opportunities for us to capitalize on either way. So I don't have too many charts to go through with this week for you guys, but we do have a couple of good ones. So we saw that our two-wave did end on DXY when we expected it to, and we are continuing to come lower. So my bias is still going to be bearish on the dollar, possibly coming back down to this support fractal right here, about the 89.20 level. So moving into gold, I do think that this looks fantastic, right? We had a pretty good run recently, but I do think that we are due for a correction of some kind, but although that might be minor. So don't be afraid if this comes back down a little bit, but I am still going to be medium-term long biased on gold. So this is our reversal zone if we do get that retracement, so be careful to look around these zones. This ranges from 1741 to 1778. Moving into the Ethereum tsunami, which has been carrying us higher and really making everyone's portfolio smile in the last couple of weeks. I do think that we are still extended for our third wave in Ethereum because we've just been continuing to extend that wave. We haven't really come down for a meaningful correction at all. And I do think that we could come lower, right? Because our subdivisions of our correction, if we're going to have a correction, is going to be an A, B, C correction, which means one move down followed by a retracement of that move and then another move lower. This would line up with our fourth wave retracement and then be able to take us higher. I'm not saying this is going to happen, but this is my primary count as of right now, so this is what I'm going to be looking for. A small retracement and then a continuation of price higher, especially while we get closer and closer to the possible end of this bull cycle, which we are expecting to be in the late Q3, early Q4 of this year. So for BTCUSD, this worked out absolutely fantastic. Around this level, we actually drew out something similar to this. Of course, it didn't follow this price movement exactly, but it did actually follow the exact subdivisions, which I thought it would, which was an ABC correction of this larger trend right here. This one right here. So we had the A, B, C. It was a zigzag because this came lower than this low right here. this level. So we did have a breakout of this pattern, and I do think that we can be continuing higher on Bitcoin. I think that on Bitcoin, right now is a great opportunity to add in if you are looking for long opportunities, because while there could be some continued downside, I do not think that that downside is extensive. I think that if we do get continued downside, we can come back down to this level, 45,000 and maybe 43,000, but I do not see Bitcoin coming lower than that point. So anywhere from right here, this 51,000 to 43,000 is going to be my buy zone, which is really not that big of a zone considering the market cap of Bitcoin and the price of it right now. XRP, we did come slightly lower, right? We were on this level and we did finish an ABC pattern. So we did also reach the reversal zone of this last wave. I'm sorry if you can hear my dog. So we did reach the reversal zone, as I was just saying, and I do think we can expect to come higher off of this point. The alternate count is we come a little bit lower to this $1.07 level, but I am along on Ripple either way. Even if we do have some very small downside continuing in Ripple, I am still bullish overall in the medium to long term, absolutely. So here's EURGBP. If you managed to hold it since our first entry, you would have come down much farther than our first wave took us down, and it would have been a great trade. Just to recap on something we've already pointed out for you guys, but this was a great trade that we called out on the beginning of May. So, CADCHF, we called this out a very long time ago, but the take profit was finally hit this week. We called this out in mid-April. Since that point, it was a fantastic trade if you set your stop loss appropriately, and we just rejected off of that top resistance fractal, which we had drawn in prior, so you would have known this was your take profit, and this worked out fantastic. I hope everybody caught this. If not, that's okay. On to the next. There's always another trade. So here's your CHF. When I did mention you would have gotten stopped out, that is because there was a rejection right here, and you could have set your stop loss below that low. I'm just going to be completely transparent with you guys, right? This is what you could have done, and probably what most people would have done. But if you're in a situation like this, when we got to the 50.0 retracement, we also know that the 61.8 retracement, which is a retracement just a little bit lower than this for people who are not familiar with Fibonacci retracements, is also a very strong level. So the best case you could do in this is putting this stop loss below the 61.8 to give it a little bit more room to breathe and just let your trade play out the way it is supposed to. So if you set your stop loss at that point, it's not exactly here, but we can actually draw that in for you guys, then you would have not have been stopped out, and you would still be in this trade, and this trade does look very good still. I am very bullish on this pair, and I think that if you are not in yet, there's still plenty of opportunities to get in. Yeah, so here is the 61.8 retracement. So you would have set your stop loss right here. Come back down to a lower time frame. And you would have never been stopped out. You would have actually only gotten around halfway to your stop loss, but you still have plenty of room to go before the take profit is hit. So my eye is going to be on this. I'm looking for entries into this shortly on a lower time frame to try to get a better entry, and then I'm going to ride this long. I'm very, very confident in this setup, and I'm very happy to see that it's not taken off without us yet. NZDJPY, so we are reaching that 161.8 retracement we spoke about last week, and also there was a head and shoulders play right here that I did catch last week, which took us down to this lower support line, which worked out fantastic, but we are rejecting that 161.8, which is this level right here in the top of this fib cluster, so I'm going to be looking for shorts on NZDJPY to take us down a little bit lower, but you guys know what happens, right? If we break this level, look for a retest and then a continuation pattern off. So traders, that was our market forecast for the week of May 17th. I hope that you guys enjoyed this video very, very much. And I hope that you guys took some insight in terms of the fundamental drivers we went over, the risk sentiment that we went over, and the technical setups that we also did touch on. If you're not already subscribed to all of our social media platforms, be sure to do so, because we're releasing new content every single day across all of our different platforms, and we're releasing videos just like this every single week for you guys here on YouTube. So, as always, on behalf of everyone at Funding Talent, happy trading.